Okay, everybody, time to begin. Welcome to the session, everyone. My name is Jose Blasco. We are here to talk about the markets, to talk about trading, to look at the Forex markets, to look at crypto, to look at whatever you guys would like to check when it comes to markets and opportunities. Happy to explore together, even though my focus obviously will be Forex, but we can certainly deviate a little bit from that if you guys need to. Please make sure you let me know. As we are beginning, I would like to make sure that we have a great, powerful, and interactive session. So I'd like to ask you if that's okay to just type a quick hello in the chat box, just so I know the chat box is working well for everyone. You heard me, you hear me well, sound is good, and we are ready to begin. So please go ahead and do that. As we are beginning the session, I would like to highlight on the upper left side of the screen our financial disclaimer. We always do that, obviously. Like all financial presentations, there is risk involved. Read it carefully, please. It's important information. It's fairly short, so I guess that it's a fair request for me to ask. As you are completing reading the disclaimer, I also wanted to point at the structure for our session, the agenda. So we're gonna first be looking at the current market environment to understand a bit what's happening out there for the various currencies. Especially we look at the dollar index. Okay, I guess we all know what's happening today. It's an FOMC day, isn't it? Then we'll talk about trade review, which, to be honest, in this case, I don't have anything to review because it's been a long time. I have not been around in the FX trade room, so I don't have a running trade that we plan together to review. But you know, with my colleagues, with Bojan and Becky, we often do that. And then basically most of the session today will be focused on finding new executions, new market opportunities, discussing how we arrive to such conclusion where a trade is to be planned, a trade is to be taken or not. And again, happy to work with you guys on this. Felix, thank you so much for your message there. I see you are connected. That's fantastic. So again, work with me during the session on the questions that you may have, and that way we can make this session very powerful and very useful. Okay. As we're getting started, I wanted to point at a couple of URLs. The first URL I would like to point at is tradewithufos.com/Jose. Maybe it's better if I zoom in. Okay, here we go. So tradewithufos.com is one of our websites, and Jose is me. So tradewithufos.com/Jose is a very interesting page for you to come. Why? Because if you scroll down all the way to the bottom, you're gonna find what we call the questions and answers section, which many traders here come looking for answers of questions that other traders had before. And when you type your question, you may get an answer and you don't have to wait. Or maybe you have a very specific question which has never been answered before, and then you are welcome to click on the green button and type your question, document the question, add screenshots of the charts and anything you need, so we can then get back to you with answers and hopefully help you to develop yourself. In today's session, as we are going over financial markets and Forex and so on, I will be utilizing TradingView. This is going to be the platform I will use the most. Give me a second, guys, because for whatever reason, my computer just got really slow. I don't know why. Maybe because I'm sharing the screen. I'm not sure what's happening. Okay, now. So here is TradingView, and we will be, again, utilizing TradingView to plan the trades. I'll come back to TradingView in a minute. I would expect that probably the majority of you trading Forex are utilizing MetaTrader. So I just wanted to make you aware that on our website, tradictive.com, okay, which is our other website. Okay, we got two websites, Trade with UFOs and tradictive.com. So if you come to tradictive.com, on the upper right, there is a login for MetaTrader. And if you are into using our MetaTrader tools, I'm just logging in now to get into my own MetaTrader account. So this is MetaTrader 5. It's on the cloud. It's 24/7 on the cloud. So it uses Linux servers. It runs 24/7. So there is no interruptions. You can run your own methodologies, expert advisors, and all of the above. And here are the UFOs, which I will be utilizing today as we plan the trades. Okay. But anyway, so just for you to know the tools I'm going to be using During the session today, before we get started with planning trades, I wanted to give you a little bit of a tour to our couple of websites. So if there is anything that you need, you know where to find it. Cool. Okay, so I want to minimize this, and now I'm going to be focusing on TradingView. So here I have a question for you guys, Felix, Selva Murugan, everyone. Please answer this question so we can make this session more useful. So in my mind, when I trade the currencies, I love to base trades out of the 4-hour charts. I love that. But maybe your trading profile, your trading style is way more short-term or maybe more long-term. So please let me know what type of time frames you normally use or would like to use, because that way I could customize the session for your needs and your preferences, and happy to plan trades of different styles, trades that may be longer term, trades that may be shorter terms, trades that may be anywhere in between, and help you, basically be in the best place as possible, okay? 1 minute time frame, Felix. Okay, so that's a very, very short time frame for over-the-counter markets. No problem with that, but certainly I'll have a few comments later when I plan trades on the one minute time frame. That will be important for us to discuss. Okay, so I'll certainly be planning some trades out of the 1 minute time frame. 1 to 5 minutes, got you? So I'll be planning on short-term stuff, and I'll give you multiple choices. Okay, so hopefully this helps. Also, Ravi, I think I believe that you just joined the session not too long ago. I was just asking the room, in case you missed it, what are the time frames that you use or that you would prefer to use in trading? So when I start looking for market opportunities and start discussing the opportunities and so on, I make sure that I use time frames that are aligned with your trading style. Maybe I do something very short term and you are a long-term investor. Maybe I do something too long-term and you are a very short-term active trader. So again, it'd be great for me to know more about you guys so I can help more and better. Cool. So where are we going to start? Well, we're going to start, with my list of FX majors. Okay. Later, we can certainly dive into cross pairs and other assets, but we're going to start with majors. I have them sorted based on alphabetical number. So we're going to start with the first one at the top with the Australian dollar. Okay. So we can start with the Australian dollar, and I was going to start with a 4-hour time frame, but since Felix, you are requesting to be much, much more active. So then I'm going to make a few changes here to my screen. Okay, and instead of using the 4-hour time frame on the left combined with the 21-minute time frame on the right, notice that I have a chart on the left with a gray background, a chart on the right with the white background. The chart on the right is a lower time frame, in this case 21 minutes per candle. The chart on the left is a larger time frame, in this case 4-hour time frames. Okay, so I'm going to change that, okay, to adapt it to you, Felix. Okay. And not only I'm going to change it here, I will also change the currencies, because this was going to be my next comment. So if I look at the bid and the ask spread for the Australian dollar, so let me freeze the screen for a moment. So if I look at it here, from 0.6937, which is the bid price, to 0.69310, which is the ask price, we got a spread of 0.3 pips on this particular currency with the current data feed I'm using on the screen, which is, as you can see here on the top, is FXCM. Okay, but it doesn't mean it's going to be like that for all brokers. So again, Felix, you may know these, okay, but for everybody to be in the same page, for the ones of you that may be newer to trading currencies or over-the-counter markets that don't trade in an exchange, so you need to know that different brokers may have different price points, slightly different price points. So if I look at the Aussie US dollar, but instead of looking at FXCM, I was to look at Oanda, for example, just to pick the second on the list, which is a different broker, a different data feed. So notice now how the bid-ask spread happens to be 1.3 pips instead of 0.3 pips. And why is that important? Well, this is extremely important. I mean, it's always important. I guess it's obvious, but this is extremely important in today's conversation because, Felix, you're asking me to trade on the 1 minute time frame, and therefore the size of the moves that we're going to catch is going to be reduced because it's a very low time frame. And if every time I come in and out of a trade, I'm going to lose the spread, in this case 1.3, So that's going to have a significant impact versus trading with a broker that gives me a spread which is way more raw, such as 0.3, which I had before on the screen. So again, the Australian dollar, for example, I would say for that very active style of trading on an over-the-counter market, I would say the Australian dollar is not the ideal candidate. I would certainly focus probably on the Euro US dollar and the US dollar Japanese yen. Probably those would be the two pairs I would pick to trade the 1 minute time frame and make sure that we are using an impeccable broker. Because notice with FXCM here how the spread is 0.1 at times, 0.2 at times, 0.3 at times, but normally it's going to stay quite low because again the euro is the most liquid currency pair in the world, as the euro US dollar, the combination, as we probably know. Okay. Selva Murugan, I see your message about no sound, so obviously you don't hear me if I say that, but maybe the FXTrend admin can help with messaging Selva Murugan and assist him with the sound issues. In the meantime, I would like to check with everybody if sound is good. Please, if the sound is good, just type on the chat box, sound is good. So that way, Selva Murugan will also know that you guys are okay with sound, and therefore the problem is probably on his end, so he can reboot or something of that sort. Thank you so much, FX Treat admin, for that message as well. So coming back to the charts, okay. So again, I'm going to be using FXCM just because it's the feed I have set up as a default on my trading view. But again, if you were to use a broker with raw spreads like 0.01 or 0.0, and sometimes they charge you a commission, something like that. So this may be more efficient for these very short-term trades. Okay, so let's go ahead and move to the 1 minute time frame using the chart on the right. Okay, so now I got on the right the euro with the 1 minute time frame, which I'm going to do certain analysis here to plan the trade. But of course, I need to combine the analysis I'm going to do on the euro on the 1 minute time frame with some other time frame on the left, and obviously the 4-hour time frame. This is 240 minutes, so there is too much difference between the time frame on the left and the time frame on the right. So what I'm going to do, and in case you haven't noticed, I'm a Fib guy. I love Fibonacci's. So I'm going to use the 8 minute time frame, which is a Fibonacci number, combined with the 1 minute time frame. Okay, that's what I would like to do to plan on this trade. Okay, but of course, again, what I'm going to try to do is if you look at, for example, this market move here, okay, what we have is the euro is moving, and then at some point it's coming back towards the moving average, which is my black line, and then it's bouncing out of the average, right? So I'm going to try to catch those moves. Of course, the average is too imprecise. We're going to get more precise with the UFOs in a moment. But the point I'm trying to make here is for you to understand what I'm trying to achieve is I'm going to try to catch a move in whatever direction. For example, in here a moment ago, okay, a few candles ago, 8 minutes each, we had the euro come to the average, and that could have been a good shorting opportunity to catch on this move to the downside. So again, I want to use the reference of the moving average to enter a market, but of course the average is not precise enough, so I'm going to have to use other techniques to be able to enter more precisely and hopefully end up with a profitable trade. If not, minimize my risk and definitely manage the size of my losses. Okay, but that's kind of like the thinking behind the scenes. So I want to catch these kind of moves out of an 8 minute time frame, but for me to zoom in and be precise at catching such moves, I'm going to be using the 1 minute time frame, which will allow me to narrow down very, 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 to a very, small price point, and hopefully find those very precise entry points that allow me to do so. Can I do the same with other currency pairs? Yes, but again, if you were to do it with other currency pairs, the spread will be wider, right? And so, like for example, let's say you took a trade when it came to the average, and at that moment in time, it was 1.0153, right? And let's say you ride the move all the way to here, okay? And to here it's 1.4144, for example. So then you're talking about a 10 pip move. Okay, from the entry to the target, it was a 10 pip move. Of course, we are dealing with an 8-minute time frame and a 1-minute time frame. So this is all about small moves captured many times a day. This is a very active style of trading following Felix's request. Later in a moment, I will switch to other styles that are a bit more relaxed to catch a little bit longer moves. But my first attempt in the beginning part of the session is to catch multiple tiny moves multiple times a day. That's the goal, right? And again, if the size of the move is going to be 10 pips and my spread is 0.2, 0.3, so I guess it's fine. But if my spread happens to be 1.5, 1.3, as we saw before, then I'm giving up too much because of the spread. So this application, in my mind, again, that would depend depending on the brokers, but in my mind, this application is going to be powerful if you do it with the euro, if we do it with the euro-Japanese yen, which is also a very liquid currency pair. But if we were to do it with other currency pairs that are less liquid, then you may get badly hurt on spreads, okay? And again, that would depend and vary from broker to broker. So let's go back to the euro, okay? And let's discuss planning on a trade. So what do we have here? So first of all, we want to catch a move the way I described. But I need to be more precise than that because trading is all about being mechanical. You want to have a mechanical process on how you assess your trades. So, there is no issue. There are no problems, when it comes to entering and exiting the markets. There is no, or less, I should say, emotional impact. So we don't make mistakes because of human emotions, which probably the majority of you know how important that is in trading. Okay. And therefore having that under control is absolutely critical. Okay, and I see a few more traders that joined the room. I see Jan, Nico, Ramon. You guys, please just to confirm that you hear me, just type a quick hello on the chat box if that's okay. And also know that I am planning on a very active trade out of the 1-minute time frame, so super quick. And a bit later, I will be planning on other styles of trades, and feel free to type on the chat box as well. Thank you so much, Jan. Feel free to type, guys, as well, if you want me to use other time frames, which ones are those? Okay, so that would be great. Thank you so much, Ramon, for that as well. So, going back to the euro, we need to be mechanical, right? So, for me to decide about which direction to trade, instead of kind of like zooming at the candles, right? And next thing you know, I'm becoming a slave of price action going up and down, and emotions are up and down too. Instead, I'm going to ignore what's happening up here, and I am going to focus on what's down here, which is the AutoClimate. AutoClimate, by the way, it's a tool which is available on our website for TradingView and is free. Okay, so I'm just going to give you a coupon code here so you guys can go ahead and can get it. It's free forever. There is a activation fee, but with the coupon code CLAIM8, okay, which it's applicable to climate. So with the coupon code CLAIM8, you can get it free. Okay, so you go to our website, and sorry to divert from the session a little bit, but that way you can then use the tools that I'm using myself. So you go to tradewithyourforce.com/apps. You find the AutoClimate there. You apply for it, you type CLAIM8 as the coupon code, and then you get it, right? And now that you get it, you will see the same thing I see on my screen in the bottom part. So this is going to make me mechanical, because now the dot on the right, it's basically telling me what to do during the next 8 minutes. Why 8 minutes? Because I'm using an 8-minute time frame. If I was to use an hourly time frame, then it would tell me what to do during the next hour. Right? So right now on the euro, okay, it's telling me I should be a buyer. Why? Because it's blue. So this tool, AutoClimate, it's processing a lot of market data and is calculating statistics. And therefore it plots with a color which direction of the market, being long or being short, carries a greater statistical advantage. This is what this tool is telling us. And most importantly, apart from telling you being a buyer, it's what makes the most sense at this moment in time, it also tells you how long the duration of such climate is expected to be. In this case, we got a thick blue dot, which means it's an up climate which is confirmed. And therefore, if you look at the statistics, standard deviation for an up climate, up arrow, so the statistics suggest that a normal thing to happen in the case of the euro right now in the 8-minute time frame is that if we catch an up climate, a normal thing to happen is a propagation of such climate which lasts 8 candles, time 8, that's 40 minutes. Okay, so if we catch a move, it could be up to 40 minutes on the way up. Okay, if it was to be on the way down, to be honest, in this case, the statistics are very similar, almost 5. This would be down arrow, so that would be the statistics for a down climate. But we are not dealing with down climates now. It's blue, so we are dealing with an up climate. And then here it's telling you how many dots we got, which is 1. So if this climate is supposed to last for 5 candles, and we are dealing with candle number 1, so it means that if I was to find a trade right now as we speak and I was to get in on board, okay, I may still write a move up to 32 minutes, because it's 5 times 8 is 40, since we already consumed 1, so it's 8 times 4, which is again 32 minutes, which that would be great, right? We are planning to do a trading style which is very short term, very active, based on Felix's request earlier when we started the session. Okay, so simply giving you some details so you understand what I'm doing. Later I will be planning more trades, and then I'll move a bit faster. By the way, if I go too fast, please feel free to ask me to slow down, because again, some of you may be newer to the markets and I may go too fast, or maybe I'm just boring you to death and you want me to speed up. So let me know and I will speed up later on, but at least during trade number 1, I would like to give you a full explanation of what is it that I'm doing. Okay, everybody, could you please confirm on the chat box if everything is going good so far? That would be important for me to know. Let me know. And by the way, notice that, thank you so much, Ravi. Ramon, fantastic, great. Thank you so much. Good, and notice that we just got a new candle that started. Okay, a new candle that started, and look at what happened to our climate. So actually, this is not very good news. The climate is now giving us a red dot. It changed from blue to red. So now we are being told that we have a statistical advantage to trade to the downside, not to the upside, but important. Notice how the dot is thin. Instead of a thick red dot, we got a thin red dot. So what does it mean when it's thick or thin? No matter the color, when it's thin, it means unconfirmed. So when AutoClimate processes market data, basically the market data which is being processed is not strong enough to basically conclude that we have a statistical advantage in any direction. For example, here you see how they were like during 4 times 8 minutes, okay, which is 32 minutes. During those 32 minutes of time, it was a wise thing to do was to stay out of the market and wait for the right opportunity to come after. Sorry, I just draw a square there on the screen, which is then, was to take advantage of a down climate. So those times were, somewhere in that region, okay, where we were being suggested based on AutoClimate to do nothing, and somewhere here we were being suggesting to come in, and it was great because now we could have potentially caught this move. Why? Because it was a thick dot. So now we are being given a thin dot, okay, which is unfortunate because obviously I want to trade for you guys, but of course I cannot control the market. I'm just a small trader in the middle of the very large, almighty market, which is the most powerful thing in the world, and therefore I'm going to have to be a bit submissive here and patient and wait for a next dot, which is going to happen in less than 8 minutes, and hopefully the next dot will give me permission to trade. Now, in the meantime, what am I going to do? Look at the euro-yen, the US dollar yen, to see if this currency is giving me permission. Okay, and what do we have here? So we have a climate with the euro-yen, with the US dollar yen. Sorry, I keep saying euro, not sure why. The climate is confirmed to be thick and blue, and therefore getting into a trade as a buyer is what statistics would suggest a smart move. Having said that, and talking about statistics, let's dive a little bit deeper into that, and we will see how patience apply, because the statistics suggest that when the US dollar yen goes up, a normal thing to expect is a move out of 4.57 candles on the way up. But notice how we are dealing with a move which is totally outside of what probability suggested, with this sometimes happen, because this move has been lasting for 14 candles already, where the statistics suggested 4.57, I'm going to call it 5. 5 is a normal thing to happen, but the move has been lasting for 14. So in other words, this climate is very, very, very overextended, and getting on board now, it's very risky, because you probably know the saying that says that the trend is your friend. Indeed, but you probably have heard as well when people say the trend is your friend until it bends at the end. And the question is, when is the trend going to bend? And the answer is probably soon. Why? Because it's been running for 14, where statistics suggest that 5 is a normal thing to happen. So again, unfortunately, both with the Japanese yen as well as with the euro, as we speak, patience apply. And the smartest thing to be done, really, instead of planning on a trade and just jumping on board, would be to wait for the right setup to develop, which again, based on autoclimate, this would have been the conclusion right now. Let's wait for the next candle to confirm what to do. Of course, I don't want to wait too much, because we are together for an hour, and I would like to do a little bit of trading action so I can demonstrate and help you understand how trading should be done, help you acquire new ideas if you are trading already and you're just trying to develop yourself further. So, again, I'm happy to help you in any way you'd like, and I cannot help you too much unless I trade. So I'm going to look for other opportunities, but again, keep in mind what I said before. So if I look at the pound, we have a spread of 0.5, right? So 0.3 now, but sometime now 0.7. So not super ideal. If I look at the Aussie US dollar, what do we have? 0.1, 0.2. So it seems that it's just a bit better. Look at that. With the Aussie we just got, what I was talking about. It just came here and started falling, and this would have been a very nice one to catch. Unfortunately, I'm late to this one. But anyway, so let me try to see if another currency pair is giving me. What about the Swiss franc? I got 0.4 spread. Okay, 0.4 spread. It's not the best, but it's okay. And what we have here, it's okay, because we are in a confirmed climate to the downside. Statistics suggest that the normal thing to happen to the downside would be movements that last 6.17 candles, and we've been moving down for 3 candles. Okay, so from there, we could expect the market to continue falling. So I'm excited, but let's continue. I draw a ray, starting where the black line is. That's my moving average. And remember, I told you that I want to use this black line as a reference. Okay, so somewhere around the black line, I would like to take on a short, assuming I am given the opportunity to take on a short. Okay, so how am I going to be confirmed to take an opportunity on the short? That's when the 1 minute time frame on the right comes into place. Okay, the 1 minute time frame on the right is the time frame that I'm going to use for my entries. Okay, the 8-minute time frame on the left is basically the time frame I use to understand my market direction and decide if it's time to go long or if it's time to go short. But the time frame on the right, which is the 1 minute time frame on the US dollar Swiss franc, that's the one I'm going to use to plan on my entries and exits. So to do that, I use another piece of technology that we call the UFOs. You can see the red UFOs and we have the green UFOs. So those UFOs, you may have seen before. It's a patented technology that we have, and it stands for on-field orders. So when you see a red UFO, that price zone from 0.9617 to 0.9620, that price zone is made of on-field orders to sell. So the expectation would be that if price reaches that red zone, from there it's going to fall. And I would want to take a trade short inside that zone with a stop above, in case I'm wrong and it doesn't fall and it rallies. So I want a protective stop located right above. So my size of a loss would basically be the difference between the two red numbers. Okay, 20 minus 17 is like, let's call it 3 pips to simplify. Okay, but I don't have that yet. Okay, why? Because I have a red zone, but it's not lining up with my black line, which is the EMA reference. I don't have that. Okay, so I need to wait for a red UFO to form here, which could happen anytime. I need that evidence. I mean, could I enter now? Of course I could. I could enter at this price with a stop all the way above there. That could make sense too. But I would be taking more risk because I would be entering at 13, right? 096.13, right? Instead of 17. So I would have a greater level of risk. And my intention as a trader would be to minimize the risk the most I can. So I would like to enter with a UFO which is enveloping the black line instead of a UFO which is all the way far away from the black line. That would be my intention. Now, if I was to wait, which I'm going to wait, if I was to wait and I was to be given a UFO, so I'm going to pretend there is one. Okay, let's say a UFO shows up, which it may show up real time in any time because auto UFOs is a real time technology. So if a UFO shows up here, okay, I'm going to be ready to plan on a trade. Here we go, it just showed up. So 96, here we go, let's do it. So we're going to be planning on selling at 0.96134 with a stop located at 0.96. I'll make it 17 with a target located at 0.96071, which is the green UFO below. And let's say I want to risk, I don't know, I'm just gonna use a random number, $100 on this trade. So that would be that size of a trade. Let me review my prices. Stop, target, all is good. So I'm placing the order here. Okay, so I'm placing an order to sell here. My stop is above the UFO, as I said before, and my target is before we get to the green UFOs below. Okay, so now, as you can see, this market is already falling, and you may be feeling, I'm missing on the move. Okay, great. Yes, I am indeed missing on the move, but it's okay. I'm playing patience. I'm waiting for these now to retrace, and when it comes back, now I got the evidence. We got sell on field orders. So now this reaction that we got to the average in the context of a down climate is likely going to be stronger. Of course, the price to pay to that evidence is that now you need to wait for price to come back, which, I would say it should come back, but there will be instances where the price may not come back. And if it doesn't come back, then it's fine. We plan a new trade. There are many trades to be taken, but this is the one I just got now. Okay? So we're just going to wait, and we just need the Swissy to rally by, let's call it 3 more pips. And we're going to be in a trade risking $100 in exchange to making 175. Of course, there are market conditions where, and again, guys, I'm trying to mix the trading time with also a little bit of lecture time to, again, open your eyes to things that could be done in trading, things that I do in trading. But basically, what I'm trying to say is that there are times where the distance between the green and the red UFOs is very far away. So then you're risking 100 to make 500. And there are times where the distance between the UFOs are very close to each other. And therefore, you're risking 100 to make 50. And then in my mind, that trade doesn't make sense and it's not worth it. So I would not take it. Okay. And we're talking about risk management, reward to risk ratios, and things of that sort, which, again, if you have been trading for a while, I'm pretty positive you know what I'm talking about, okay? But again, here we are playing patience. We're just waiting for this to rally a bit more. We have in our favor the fact that we have a down climate. So if this market is more likely going to fall and rally, so if it rallies by a little bit and gets us filled and the on-field orders kick in, so then we are in what I would call a fairly high probability trade on the way to potentially make a profit to the downside. And if I'm wrong, I have a stop above, okay? That's the plan. How is it going, guys? Hopefully we get filled in the following few seconds, but let me know on the chat box. And I see some of you have joined as well. We have a few new attendees. How is it going, my friends? I'm trying to give you as much as I can in the session. So I'm speaking a little bit fast here. I'm concerned in case I am actually moving a bit too fast. Let me know, how is the pace? Did you guys follow the rationale of the trade? Am I making sense? How do you feel about the trade? Any comment, guys? Any comment? We are all traders here, and therefore what I'm while I'm leading the session, certainly we can make this webinar as well a little bit of a conversation. It doesn't need to be me, the only guy providing the talking or providing the feedback. Okay, you guys can also feel free to interact. So come on, Mr. US dollar Swiss franc, go up for a couple more pips so we get filled, and then we can be in a trade. In the meantime, okay, and again, guys, I'm waiting for your feedback. Okay, let's do this together. Let's do this together. So in the meantime, I'm looking at the 8-minute time frame on the left. So we are 3 minutes away from a new candle on the screen. So in 3 minutes time, I will reconfirm the climate on the US dollar Swiss franc to reconfirm that the trade is still valid. But also this allows me now to go back to Mr. Euro and Mr. US dollar Japanese yen and see what the climates are there after a new candle on the 8-minute time frame. So I'm going to be doing that in just a moment. Okay. Playing patience. Okay, come on. A little less than a pip. And we're going to get filled. We just got filled. Here we go. We are in the trade with the US dollar Swiss franc. And now we need those unfilled orders to kick in. We need the climate to continue propagating itself. I mean, risk management is under control. Odds are on our favor based on the rationale I have explained before, and assuming that you trade like I trade, or you are into the type of concepts I presented today, hopefully this makes sense. And now we can see the Swiss franc is coming down by a little bit. Keep going, my friend. Okay, keep going, my friend. Ideally, we would have a new UFO form, and if that's here we go. So now we're gonna move the stop to this location, so I cannot lose money on this trade anymore. Here we go, and now we just need the Swiss franc to keep falling a bit more. Okay, I move stop because we just got a new UFO forming, right? So then a new pile of unfilled orders was added, so I'm relying on that, and if it's gonna go above that, I wanna be out. So with that new pile of unfilled orders added, probably we're about to see another push to the downside on the Swiss franc. Hopefully this brings us down to our final target, and we will collect those $175. Worst case, we're gonna exit this trade at no profit or no loss because our stop has been now moved to the break-even location. Ramon, you're looking at the US dollar Swiss franc and the movement seems flat. Yes, which time frame are you checking, Ramon? Okay, here we go, a bit more. Come on, my friend. Okay, if another UFO forms on the screen, I will trail my stop one more time. A bit more, come on. One more pip, I'm gonna be out for full profit. A bit more. You are on the 5-minute chart. Okay, good. Okay, we are approaching the final target. We are touching the line. We just need to go a little beyond. That's it. We got to our target. We just made $175, my friends. Okay, entry to target, risk under management. That's, you see what we have done here? We've done this. Okay, waiting for price to come to the average, take the trade from there, ride the move out of the average in the context of the climate, and for us to be precise, catching the move around the average, because the average is just a reference, it's not precise enough, then we use that beautiful red UFO that served us to get into the trade. Okay, so beautiful first trade of the day. We are done with it, and now ready to find a new one. So Ramon was commenting on the 5-minute time frame. I'm happy to switch to the 5-minute time frame. Felix, before I switch to the 5-minute time frame, and Felix, since you were requesting a little bit of trading action using the 1-minute time frame on Forex, I'd like to ask you specifically in your particular case, how do you feel about what you saw? Is this compatible with your trading plan? Is this compatible with your trading style? Of course, I don't know how you trade. I don't know if you are trading already. I don't know if you are trend trading, counter trend trading. I don't know what's your style. So please let me know a little bit more about what is it that you do? How do you feel about what you saw? Was it helpful to you? Please get back to me with a little bit of feedback so I could understand a bit better if this was useful to you. And by the way, look at the massive move in the opposite direction that is happening now. Why? Because there was the green UFO, which is the reason why we took profits at that price point. Okay, so no greed. Okay, no greed. Even though the climate told us, you know, this market may last 6 candles on the way down. So notice that sometimes the climates will last 3 candles. Sometimes they will last 2 candles. Why? Because there are UFOs on the chart. Okay, because there are UFOs on the chart, and therefore those UFOs are basically interrupting what statistics would call normal, because obviously the driving force in the market is obviously the unfilled orders. Okay, so just keep that in mind. So let's go ahead and change now to a 5-minute time frame. And Felix, so you are new to trading, and this helped you to discover that trading on a 1-minute time frame is profitable. Yes, it is indeed. But remember what I said. You need to have an impeccable broker. That's the first thing, right? Because the spread, could be very hurtful when it comes to the net profits of your trades. Okay, so it's very, very important that you have a very good broker with very, very narrow spreads to trade such low time frames. And then, Felix and everybody, I would say that probably the most important part of what we've done is that it's so easy now to fall trap of human emotions, because on the 1-minute time frame you could execute many trades a day. So let's say I got 5 trades like what I've just done, which are all profitable. Guess what? I may feel now I'm invincible, and next thing you know, I triple or quadruple the size of my trades out of greed, and then I lost the whole money I made on multiple trades in one trade just because I got greedy. Or the opposite is true. Let's say you get 2 or 3 trades in a row and they are losses. So you may get paralyzed and you stop trading, and if you had to keep trading, maybe you would have ended up as a profitable trader for the day. So again, the big challenge of the very low time frames is the human psychology that is obviously very impactful to all of us. And the problem of human psychology is that many times the impact happens at a subconscious level. Okay, it happens at a subconscious level, and therefore you don't realize it's happening. So I would say if you're going to trade a very low time frame, Felix, and you happen to be new to trading, as you said, make sure you have a rule in your trading plan where you limit yourself from how much activity you do. Like maybe you're like, okay, I'm going to take 3 trades a day maximum. And maybe 2 months later, then you allow yourself to take 5 trades a day. But why am I saying a few months later? Because a few months later, now you are more knowledgeable, not only about the markets, but also more knowledgeable about who you are as a trader, how emotional you get if you do, how non-emotional you don't get if you don't do, etc., etc. But if you don't know what you don't know about trading and yourself, careful with the very low time frames, because they are the recipe to get emotional. Okay, so keep that in mind together with the comment about the brokers. Anyway, let's go back to the euro. And now what I'm going to do is I'm going to be looking at the 5-minute time frame. Okay, so I'm going to move to 5 minutes. Ramon, you were mentioning that you are a price action trader using the 5-minute time frame. Okay, so let's talk about that. And by the way, I'd love it if you could define a bit better for me, Ramon. What do you mean by price action? Because there are many people in the industry that, just like many people would define a support or a resistance as something different, as a line on the chart in a different place. So many people define price action differently, including myself. So I'd love to make sure that I am with you, I am in the same page with you, and therefore whatever I am about to demonstrate is in line with what you do or helpful to you. So I don't misunderstand what you mean by price action trading, okay? Because again, there are many schools of thought that use the same terms but mean completely different things. So please let me know when you have a moment, okay? But in the meantime, I'm gonna get my charts ready. We still got 15 minutes to go before the session is over. So hopefully we still have time to at least to get another trade, okay? Okay, so I was taking a sip of water. Thanks for that, guys. So anyway, so if I was to trade the 5-minute time frame with the UFOs, well, yes, Ramon, of course, international banks trade price action, and they actually do it with automated computers that are programmed to look at market data that we don't see on TradingView, and they do magic things that retail traders will not be able to do because you don't have a team of developers at home, I would say. So again, the banks do many things, but again, and there are many schools of thoughts, educational companies, traders like myself, which out of passions from time to time we do live trading sessions and things like that. We all use words, and just like in medicine, you have different doctors using the same word and they mean something different. The same thing happens in trading. So I would like to make sure I understand what is it for you trading price action. If you could give me an example. I certainly know what's price action. I know the various definitions of price action out there, but I would love to know what is price action for you so I can help you, okay? If that makes sense. Anyway, so if I was to do a trade on the 5-minute time frame, then I would love to combine that with a larger time frame, again, to understand my market environment. Like we done before, we looked at the auto climate to understand the market environment. That told us time to be short, and then we found a good entry on the 1-minute time frame. So I need to have a permission system that tells me which direction of the market I have a higher probability trade in front of me. And with that understanding of the market environment, now I'm ready to find on an entry and an exit. But I first need to answer the question, is it time to go long, is it time to go short, or is it time to wait? Okay, so for that, I need to use a little bit of a larger time frame compared to 5 minutes, okay? And I said it before, I'm a Fibonacci trader, I love FIBs, so I'm going to be using the 55-minute time, sorry, not the 55, the 34-minute time frame, which is, I'm surprised it's not here. How come it's not here? So let me add it. 34-minute time frame, which is a FIB time frame that combines well with 5 minutes. Here we go. I have it here now. So here's my 34-minute time frame on the euro. Auto climate is loading. Okay, we are in a down climate on the euro. It is confirmed. Okay, so the climate is confirmed. We are in this climate during 3 candles. Statistics suggest that a normal standard deviation duration of such climate is 7.63. So that's something achievable based on statistics, even though sometimes the duration will be less. Sometimes the duration will be more. Look at how many red dots there. That was crazy. By the way, this had to do with the news that we had the other day, isn't it? So obviously the news many times, and today is an important day. The news many times will distort statistics. Okay, but knowing what's a normal thing to happen, it's certainly a good thing, right? Because if you expected a normal thing to happen in the euro is to fall by 20 candles, but the normal thing to happen is to fall by 7 candles at a time. So you would probably set your targets way too far and you will never reach your targets. So it's very important to understand that, isn't it? So this is a good market condition in which to trade. Why? Because we're in a climate which is progressing during 3 candles, and the statistical duration of such climate is, let's call it 8. So in other words, if I get into this climate now, I'm gonna catch a move potentially of 5 more candles. 5 plus 3 equal 8. So 5 candles of 34 minutes each. Okay, that is, a few hours trade. So I could catch a trade out of a 5-minute chart and ride the move for a few hours. That could be a trade that may give me a 5-to-1, a 10-to-1. It's looking good. I'm okay to continue planning on the trade. Okay, and in order to plan on the trade, I'm going to use a ray located where the EMA is to use as a reference. Okay, so notice if I put this ray here, it's coinciding with that UFO from the 5-minute time frame. Okay, so that's pretty cool. Okay, that's pretty cool because basically, like I had before, I have a similar setup where I got a UFO lining up with the EMA. So I'm expecting this market to come back, and as it comes back to the EMA, somewhere around the EMA, I'm expecting to fall, right? So the EMA is here, okay, and thanks to the UFO, I got the unfilled order, so price may come a little below the EMA, a little above the EMA. We're inside the UFO zone, and from there, we're expecting it to fall, okay? So that's great. Now, with all of this said, I'm not super happy, okay? And I have two reasons to not to be super happy, and we may find a solution to be a bit happier, but let me tell you first why I'm not super happy about the setup. And also let me look at the chat box so I don't forget what you guys are typing there. So Emmanuel, when they trading smaller time frames, it is best to stick with one pair or just look for similar patterns in different pairs. With Forex in general, especially when you trade very small pairs, you're gonna find the liquidity, the best liquidity which you need for the low time frames. You're gonna find it with the majors, which are the pairs with the US dollar involved. So what's going to happen, because the US dollar is involved and is the most relevant currency pair, is the most relevant currency in the world by far. So what happens is that you have such a great level of correlation on those trades, which basically, not always, but in many cases, you may get long the euro. And if you're wrong on the trade and you got long the pound and you got long the Aussie dollar at the same time, you end up wrong on 3 trades at the same time because the level of correlation is very high. So because of that reason, personally, in my trading style, what I prefer to do is to stick with one pair. Why? Because that way, I make sure I am in one. I may be looking at multiple charts at the time. I may look at the euro and the yen, for example. But if I get into a trade on the yen, I ignore any trade on the euro. And if I get into a trade on the euro, I ignore any trade on the yen. So I don't find myself in a position where I'm doing 2 trades at a time, because being so highly correlated, yes, I could be right with 2 trades at a time, but I could also be wrong with 2 trades at a time, and that creates a big penalty for your account. And yeah, and this is putting on the side the fact that you may need to rush to enter the trade. As you saw me earlier, I had to move quick to enter the trade because it's short-term intraday. And if you are dealing with, let's say, 5 pairs and you need to be quick on 5, then the probability of a mistake is also too high. So Emmanuel, a little bit of a long response here, but it's important stuff, because everything I said is not only out of convenience, but is also out of managing your risk, right? Because entering trades which are correlated, it's definitely adding risk to your portfolio, okay? My pleasure. Ramon, what is happening now, including news events? Yes, so I can talk about this in a moment. Felix, the euro is a sell, right? Yes, correct. The euro in the 34-minute time frame is a sell based on AutoClimate. And again, remember everybody, not sure if you all get it, because some of you are in the session now, you were not here before. I gave everyone a coupon code where if you go to our website, which I'm typing on the screen, okay, and you use the coupon code CLAIM8, so then you can get AutoClimate for free. So you can do this market analysis. The one I'm doing on the left, you can do it by yourself on your TradingView by yourself, okay? Cool. So wrap up, FX Trade Admin, okay? So we are, we are wrapping up in just a sec. I will make one last comment, which is the reason why I said I was not too happy about the setup. And the reason why I was not too happy is that if you recall earlier, the distance between the red UFO, sorry guys, I wanted to do this. The distance between the red UFO, okay, not sure why my drawing is not performing well. Oh, interesting. Okay, forget about it. The distance between the red UFO and the green UFO, okay, it's very, very shallow. So if I was to enter a trade where my entry is 101.346, where my stop is 101, let's say 52, okay, which is above this UFO, this should be sell. And my target is the green UFO located at 101.26.8. So if I was to do this trade, I am risking $232 in order to make $104 if I'm right. So this is a 0.4 to 1 trade, which I'm really not happy about. I want more profit margin. I want greater profits when I'm right and lesser losses when I'm wrong, instead of larger losses when I'm wrong and small profits when I'm right. Okay? So the other trade gave me that component. The other trade allowed me to risk 100 to make 175. I'll take that all day long. But to do the opposite now, where I'm risking 232 to make 104, not happy. So that's what I meant. Okay, so I'm gonna conclude the session here because we have to. But anyway, the way to solve the problem again is to use a little bit of patience. Okay, and because the climate is down, the euro is likely going to go down. So if it goes down, many of those buy orders get filled, and therefore many of those green UFOs go away, and they will be removed from the screen automatically because auto UFOs is real time. And the moment those green UFOs are gone, now you can get into the trade, using the red UFO, where your profit target will be set much lower. And now, you may be risking, 200 to make 500 or whatever the case is. But again, right now, unfortunately, the setup will not be a smart one for us to take it. Great, my friends. With all of this said, it's been my pleasure. Yes, of course, I can certainly share the code. 1 second. So the website is tradewithufos.com. I'm typing this on the chat box. Okay, and the code is flame 8. Okay, so you can get that. Okay, wonderful. Thank you so much, my friends. Again, it's been fun. It was a little bit of time. Normally you see my colleagues Bojan and Becky in the sessions all the time. It was a little bit of time that I had not the chance to be in the webinar room with the beautiful FX Street community. So thank you for joining me. Thank you, FX Street, also for hosting the session and inviting me to be here today. Again, my true pleasure. And again, you can contact me via the website. If anything, just give me a shout and I'll be happy to respond your email and be in touch. Everybody, you take care, trade safe, trade well, and see you on the next one. Bye-bye, everybody.